Hello everyone, I hope you are always healthy and stay safe from the COVID-19 pandemic. I will introduce myself. My name is Enjel Juli Naibaho. I'm a student from the University of North Sumatra Accounting Study Program, Faculty of Economic and Business in 2018. Okay, I will explain about Chapter 2, Operational Firm and Sharing of Profit. Number 1. Estimate account elite. According to the Rabin 1989, estimate that record transaction related to firm partners comprise the following estimates. A. Capital estimates. All ownership rights in the partnership firm are combined in a single estimate called capital. This estimate combines all the components that increase or decrease the amount of capital, whether originating from the initial investment, additional investment, reducing investment, or that originating from the distribution of profit or loss. B. Drawing forecast. This forecast is generally open to accommodate various transactions that change the amount of capital of Alice. Therefore, this estimate can be classified as a provisional estimate that will eventually be combined with the capital estimates. So, the two estimates above will increase if 1. Investment made by Alice. 2. Acquisition of liabilities first debt by Alice. 3. Takeover of elite prepaid accounts by the firm. 3. Takeover of elite prepaid accounts by the firm. 4. The profit sharing of the firm. Firstly, the two estimates above will experience of reduction if 1. Withdrawal of investment by Alice. 2. Takeover of the firm's accounts receivable by an ally. 3. The firm's prepaid debt takeover of allies. 4. The firm's loss sharing result. C. Account payable and account receivable. Account receivable are the amount owed to a company by its customer, while account payable are the amount that a company owes to its supplier. The amounts of accounts receivable and payable are routinely compared as a part of a liquidity analysis to see if there are enough funds coming in from receivable to pay for the outstanding payables. Number 2. Firm operation. Transactions that exist within a company, whether service companies, trading or manufacturing companies, can be grouped as follows. A. Sales transaction. Goods on service made in cash or credit. B. Transaction receiving money from various sources such as cash sales, receivable received as a result of credit sales, interest received capital deposit, and others. C. Purchasing transaction. Goods or service, whether in form of inventory of goods in the form of asset, to be used in company operation, made either in cash or credit. D. Money expenditure transaction for various purposes, such as cash purchases, debt payments, premium payments, expense payments, and others. E. Other transaction other than the 4 transactions above, such as purchase and sales returns, recording or data adjustment data, and others. The records of the various types of transactions above are as follows. A. Sales transaction. Number 1. Sales of service in cash will be recorded, cash in debit, and service revenues in credit. 2. Sale of service on credit will be recorded, account receivable in debit, and service revenues in credit. 3. Sale of merchandise by cash are recorded, cash in debit, and sales in credit. 4. Sales of merchandise on credit are recorded, account receivable in debit, and sales in credit. B. Money receiving transaction. Sales of service of merchandise by cash will be recorded as noted above. 1. Receivable will be recorded, cash in debit, account receivable in credit. 2. Interest received, capital deposit, bank loan received will be recorded, cash in debit, interest income in credit, drawing capital A in credit, bank payable in credit. Okay, we will next see purchases transaction. Cash purchases of merchandise or other asset will be recorded. Supplies in debit, equipment in debit, and office equipment in debit, and cash in credit. Number 2. Purchases of merchandise of other asset on credit will be recorded. Supplies in debit, equipment in debit, office equipment in debit, and payable in credit. D. Money spending transaction. Purchases in cash will be recorded as in journal notes above. 1. The payments will be recorded, payable in debit and cash in credit. 2. Drawing payments, expense and other payments will be recorded. Drawing elite A in debit, salary expense in debit, commission expense in debit, and cash in credit. E. Other transaction. 1. Purchaser's returns will be recorded, payable in debit, purchaser returns in credit. 2. Sales returns will be recorded, sales returns in debit, accruals payable in credit. 3. The depreciation calculation for fixed assets and equipment usage will be recorded, depreciation expenses in debit, supplies expenses in debit, accumulate depreciation in credit, equipment in credit. Number 3. Firm profit sharing. The following are some ways to share the firm's profit or loss. 1. Divide it equally. In this way, all firm partners will get an equal share of the net profit or loss that the company acquires, with a certain amount of profit or loss obtained by the firm. The amount of shares that will be received by each partner depends on the number of partners. The records are income summary in debit, drawing list A in credit, drawing list B in credit. Number 2. Divide it according to certain comparison. In this way, the profit or loss earned by the firm will be divided according to a certain ratio that has been agreed in the firm incorporation date. The records are income summary in debit, drawing list A in credit, drawing list B in credit. Number 3. Divide it by capital comparison. Capital in this case can be divided into several versions, namely A. Comparison of original capital. Startup capital is the amount of capital that is first invested by its partners. The records are income summary in debit, drawing list in credit, drawing list B in credit. B. Period initial capital comparison. The initial capital for the period is the amount of capital at the beginning for a certain period. For the first period, of course, the amount will be the same as the initial capital amount, but in subsequent periods, this amount is likely to change, namely by adding additional deposit, withdrawals, or change as a result of the distribution of profit or loss for a certain period. The records are income summary in debit, drawing elite A in credit, drawing elite B in credit. C. End of period capital comparison. The amount of capital of each partners at the end of a certain period prior to distribution of profit or loss for the period. So, the amount of capital is the amount of capital at the beginning of the period plus additional deposit and less drawdowns during the period. The records are income summary in debit, drawing elite A in credit, drawing elite B in credit. E. Average capital comparison. Average capital is defined as the average amount of capital in a certain period after taking into account all capital movements that occur during that period prior to the distribution of profit and loss for that period. The records are income summary in debit, drawing elite A in credit, drawing elite B in credit. Number 4. Divide according to 1, 2, or 3 after calculating the interest on elite capital. This method of sharing is actually the same as the 3 methods above, but before one of the 3 methods is used first, the interest on the capital invested by each partner is issued from the profit or loss earned. Thus, the share of profit or loss earned by its partners consists of the interest on the capital, and the remaining amount distributed. The records are income summary in debit, drawing elite A in credit, drawing elite B in credit. Number 5. Divided according to method 1, 2, or 3 after calculating the salary of bonus for Alice. In this way, it not interest on capital that is calculated first, but salary or bonus for Alice in the case of salary. Of course, it will be calculated based on the amount of time allocated by Alice to the firm regardless of whether the result of operation show profit or loss. Otherwise, the bonus will be calculated if the firm's operating results show a profit. Especially for bonus, the Alice may agree to distribute a certain percentage of the bonus after or before calculating the bonus itself. A. The bonus is calculated from the profit before the bonus. B. The bonus is calculated from the profit after the bonus. Number 6. Divide according to 1, 2, or 3 after calculating the interest on capital and salary or bonus for Alice. In this way, in addition to interest on capital, salaries or bonuses for partners will also be calculated first. The remaining profit or loss after these components are calculated, then distributed to Alice in a certain agreed manner. The records are income summary in debit, drawing elite A in credit, drawing elite B in credit. Okay, I will next to the number 4, firm financial report. At the end of the accounting period, its accounting entity, including firms, must prepare financial statements that summarize the result of their operation and their effects on the company's financial position. The entirety will be summarized in the financial statements, which consist of statements of financial position, income statements, change in financial position reports, and cash flow reports. PSAK, Basic Framework for Preparing Financial Statements. Especially for firms, these differences will be seen in the statement of financial position, in the capital section, and change in financial position shown in the statements of change in capital. In the statements of financial position, in this capital section, you will see the amount of capital in the name of its partners. This, of course, different from the capital section of individual companies and corporate companies. In individual company, capital will be seen in the name of an owner, while in private company, the capital will be divided into share and given the title share capital. If the limited liability company will find a report on change in retained earnings, then the firm will find a report on change in capital. Okay, next I will show you example for the chapter 2. I hope you understand and I hope you like about the example. Okay, I'm sorry if there are words that are not fluent and suitable in English. I hope you like this video and enjoy. Thanks for watching. See you next time.